Hi, everybody. Welcome, and thank you for joining us for yet another edition of Self-Directed IRA Saturday. My name is Zach Wilson. I'm one of the IRA specialists here at Quest Trust Company. So before we get started, I got to give you the disclaimer. Everything that you're about to see here is for your educational purposes only. It's important to understand the role that Quest will play when it comes to your retirement investments. We're really here to facilitate whatever transactions you'd want to do within your account, as well as offer as many resources and as much education as we possibly can to both our clients and investors. But with that being said, Quest does not offer any sort of tax, legal, or investment advice, nor do we endorse any specific investments. So we always stress doing your own due diligence. So for those of you who don't know us, we are Quest Trust Company. We're the largest self-directed IRA custodian in the state of Texas. We have roughly 20,000 active investor clients all across the country. Currently, we have 2.7 billion. We're about to hit that 2.8 mark in assets under administration, and we're hoping that number keeps on growing. We have over 100 employees, 34 of which are certified IRA service professionals. Now, if you've been with Quest for a while, you know that we haven't always been that size. We've been growing a lot lately, and we're making sure that we're maintaining that level of customer service as we grow. So when you call, you're not going to get a voicemail, you're not going to get a machine, press one to go to this department. No, you're going to get someone who answers the phone and can answer most questions that you have. And if you want to take a deep dive into the nitty gritty, we have 34 certified IRA service professionals on staff to take that dive with you. And as it stands right now, we have over $400 million in undirected cash sitting in our clients' accounts. That represents opportunity, right? Whether you're a part of that current Quest pool or you're someone who needs funds to make your deals happen, that is where your opportunity is going to lie. But before you make any sort of investment at all, the first step is to always educate yourself. So please take advantage of the free education that we offer. Right? Check out our YouTube channel. Check out our education center. We have hundreds of videos going over just about every type of aspect when it comes to alternative asset investing. Right? So if you want to take just the very starter course, get introduced to self-direction, or if you want to take a deep dive into note investing, syndication investing, we have a wide range of videos that can cover all of your needs. But once you're educated, right, and once you know what investment you're going to pursue, the deals won't make themselves happen. So you have to take advantage of the networking opportunities that we have. All right, so come check out, come visit our classes like you're doing right now. Check out our virtual networking happy hours. Go to our socials. Our socials are by far the most common and the most used social event that we have, right? And how it works is the first 30 minutes, we're going to allow for networking. So you get to meet everybody who's going to be there. After which we have a speaker come out. They're going to present for about 30 minutes to an hour. Right after that, we allow for more networking and deal pitching. So if you have a deal that you're wanting people to know about, or simply you have capital that you're looking to lend out, check out one of our socials, right? Let the people know that you're available for those deals. This is going to be on the first, second, and third Tuesday of every month in our Houston, Austin, and Dallas office, respectively. So it's going to start at 6:30. And like I said, go until about 8, 9, depending upon how much networking there is. Be sure to take advantage of the rewards offer that we're offering right now. This is the rewards promo that's going to add credits to your account as you move funds in. So if you make a qualifying deposit into the account, you're going to be rewarded with a deposit into the account that can cover all the fees going forward. Essentially, you're paying off the fees with the money that you're moving in without having to cut into your own retirement. Also, come check out our Elite Multifamily event. We're going to be hosting it on August 12th in Dallas, Texas, and we're going to be focusing on the multifamily space. Obviously, there's been a lot of movement when it comes to multifamily. So right now, we're going to be utilizing this to help people navigate that space right now, because it seems like that's more important than ever to know exactly what you're doing whenever you're entering into the multifamily space. Also, we're bringing back the Quest Expo. Guys, this is going to be the biggest one that we've ever had, which is why we took so much time to be sure we're preparing it properly so that we can deliver you the experience that we want to when it comes to this Quest Expo. It's going to be in Dallas, Texas on June 28th through 29th in 2024. So we're giving people a lot of time just so we can take a lot of time, like I said, to prepare. And that building you see in the background is actually the building that we are going to be hosting that expo in. And they said we can change the lighting. So we're going to really show out for this one. It's going to be a lot of fun. Make sure you save the date. Come join us in Irving, Texas. We'll be sure we're going to deliver the experience that we wanted to. If you have any questions at all, feel free to reach out to me. There's my contact information. Give us a call, speak to an IRA specialist, and I'll be happy to help you out. I'm going to be posting all of the links in there after we let Fred take over. But speaking of Fred coming on, I'm really happy he's going to be coming on here And the reason is because when people are getting into the note space, right, there's different strategies you can take, both active and passive, and not many people realize that there's even a difference between the two. So here to talk about active and passive note investing and the strategies that you can approach is Fred Moskowitz. Fred, you there?
Hello, Zach. Great to be here.
Absolutely. Thank you for joining us, Fred. I'm really happy.
Thank you.
All right, so I'm going to go ahead and give the floor to you. Let's take it away.
Thank you. Thank you. Hello, everyone. My name is Fred Moskowitz, and I've been active as a note investor for the past 13 years. And it's a business that I love. It's so powerful. And today I'd like to share with you some thoughts, some concepts about the different ways to get involved in note investing, because there's so many different niches, different approaches, and there's no right or wrong answer about this. It's a matter of learning the different ones and seeing which fits best into your own lifestyle. And so that's what we're going to explore today. Which approach is right for you? I'd like to start off real quick. There might be some of you out in the audience that are hearing about note investing for the first time. What is note investing? Well, note investing is the idea of investing in debt, in loans that are secured by real estate. And so this is a very interesting part of the real estate business. A lot of people are familiar with owning real estate as an investment property, right? Owning rentals, whether it's single family properties or multifamily properties, maybe vacation rentals, short-term rentals are really popular right now. But note investing is when we talk about investing in the paper, in the debt side of these transactions. And what happens is, for the investor, you're able to step into the shoes of the lender. And what essentially happens is you transition from being the one making the monthly payments to being the one receiving the monthly payments. And what I love is that note investing really sets you up to receive steady and consistent cash flow on an ongoing basis, and you don't own the property, so you don't have the headaches of property management and the liability and those things. You are a secured lender where your investment is backed by an asset with tangible value. There's collateral. That is what a secured note is. It's when there's real estate backing your investment. So how does someone get started with note investing? There are several ways to get started. As real estate investors, many of you are familiar with the concept of owner financing, where a property owner sells a property, carries financing for the buyer. So that's one way to originate notes. The next way is to buy an existing note on the secondary market. Most people have experienced this from the position of a borrower, where, let's say you buy a property or you refinance a property, you go to closing, you sign all the paperwork and everything, you start making your monthly payments, right? But wouldn't you know it, between 3 and 6 months later, you get that letter in the mail from the lender saying, "Dear Mr. and Mrs. Homeowner, please be advised that your loan is being sold. Here is the contact information for the new lender. And starting next month, please send your payments to the new lender. And by the way, don't worry, none of the terms of your financing will change. Everything will remain the same. The interest rate, the payment amount, all those details. Don't worry. However, please make sure you start sending your payments to the new lender next month." And so that is the secondary market at work, where notes are bought and sold and transacted every day. And for us as investors, we're able to step into that and buy notes for our own portfolio. That's the secondary market at work. And the third way to get involved with note investing is the passive approach, investing in a note fund that is professionally managed by a team. And for the investors, they're able to place their capital, earn a rate of return, and it's really a hands-off investment. So those are the three ways to get started with note investing. Let's break down a little bit about active note investing. Active note investing is when you are going to start building a portfolio. You're buying and building those assets, those notes in your portfolio, and managing that on an ongoing basis. This is a powerful business. I love it. I really find it amazing and powerful, but it's a lot of work. It really is. And so I always, when I teach and speak about note investing, I always ask people, right, think about the time you have, and how much time do you want to dedicate to this business? Because it is a full-time business, and to be successful, it's going to take a lot of time and effort. And if you are willing to put that in, you can do really well. So what are some of the things involved? The first one is working on buying notes. Obviously, as a note investor, you need to buy notes, buy product, and coming up with a good strategy for marketing and being able to source notes. You're going to be marketing to sellers of notes, whether they are other note investors, or you can buy notes from different note funds and hedge funds. Local banks sell notes as well. All these are different avenues. And so it takes a ongoing effort of marketing and outreach to be buying notes. It's something you would be doing on an ongoing basis. The next aspect of note investing is performing your due diligence. When you have a transaction lined up, you have to do due diligence on the notes, of course, just like any investment. You need to run the numbers, do your analysis, make sure that everything is as stated by the seller, and make sure your transaction is going to pencil out the way you expect it to, and that everything is true and correct. And all of that is on you as the buyer, as the investor, to perform that due diligence. I spend a lot of time, I have multiple chapters in my book that I wrote about note investing, covering this topic of due diligence. It's so important, and one that you spend a lot of time on this before you buy that note. The next aspect of note investing, this is when you're managing a portfolio. You're not going to be doing everything on your own. You're going to be utilizing a lot of vendors. So there's the vendor management component, right? We have note servicing companies. You have your network of attorneys, your legal team working on your behalf. And when it comes to attorneys, you will need an attorney in every single state where the note is located. That's a must. And so as you grow as an investor, you're going to obviously be buying notes in different states. We buy notes nationwide, so we have a vast network. And you're always working with attorneys that are licensed in the state. They're going to support you on your transactions in many different ways. Very important. And note servicers, I'll touch upon that. What is a note servicer? A note servicing company, they play a vital role in the day-to-day management of the notes. And what do? Note servicing companies, they collect the borrower payments. They take phone calls from the borrower. They handle keeping track of the amortization schedule of the note. If there's a payoff for the loan because the property is being sold or refinanced or anything like that, they keep track of that. They handle the coordination with the title company, any of those details. And another thing is they prepare and send out the tax statements that are needed, both for the borrower and for the lender, and manage all of these things. And so think of a servicing company the same way that a property manager is going to manage your rental property on behalf of the property owner. The servicing company, they manage the note on behalf of the lender, and that's a crucial role. So this is one of those important vendors that you're going to be interfacing with and working with on an ongoing basis. And the last one are your data vendors. With note investing, as I mentioned earlier about that due diligence, you need a lot of tools. There's different software, different databases, different tools. I call them all data vendors. And these are the companies that are going to be producing your title related reports and property research when you're looking at properties and the collateral. They will offer to you the credit reports that you need to underwrite and evaluate notes when you're buying them, when you're looking at the borrowers, right? You need to pull credit, evaluate that as well. So there's a lot of different data vendors, different service providers out there. And so you're going to be wanting to manage those relationships and those vendors because it's essential for you in the note business. Now, with active note investing, something that's going to happen, especially when you're starting out, is there's going to be a lower amount of diversification in your portfolio. And the reason being is the capital you have to invest, it's going to be spread out over a few assets. When you're getting started with note investing, you may buy 1 or 2 or 3 notes, and that's all of your capital is split up over 1 or a couple of notes. As you grow over time, of course, that improves and gets better, but that is just a natural part of the evolution when you're getting started. And active note investing, as I said earlier, if you're looking to be hands-on, you want to get involved, you want to be in the business, operating it, then for someone like you, being an active note investor is a great approach. You need to have the time available and be willing to do it. And as I said, this is a business and it must be treated that way. And so if that's of interest to you, go the active approach, buy the notes, build a portfolio. It's a great business and you can do really well with it. You put in a lot of work, but that work will pay off. That effort and work absolutely will pay off in the long run. I'd like to just divert a little bit and share a case study with you. This is an investor that came to me, Helen. She was a very savvy investor. Had been a longtime landlord for decades. Really savvy woman. Totally impressed with her. And she came to me telling me about a property that she had, a rental property. It got trashed by tenants and she was looking at having to renovate that property. And she owned it for so long that this was going to be the 3rd time she was rehabbing the same property. Imagine that. And so she wasn't too excited about that. And what she did was she came to me asking about note investing, and we had several conversations, talked about some strategies. So Helen went ahead and renovated the house. She said, "This is it. This is my last time doing this." She renovated the house and then put the property up for sale and did really well with it. She made a nice proper profit off the house, of course, having owned it for so long. And she took those proceeds and then turned around and reinvested it into several notes. And she was excited. This was her first involvement with note investing, and she was really looking forward to earning cash flow and income and not owning that property anymore. And she did really well with it. The cash flow started to come in the following month after she bought the notes, and she was thrilled. She was thrilled. And, throughout the conversations that we were having, I said to her, this is just like Monopoly, the traditional strategy in Monopoly where you trade your 4 green houses up into a red hotel and then you're making more money. And she indeed was. She was earning more money, more cash flow, and a higher rate of return than the property was producing. And that's something that's a general trend when you invest in debt. Many times, if you buy the loans right, you can earn a much higher rate of return. And so, a mentor of mine taught me this. Real estate is a great avenue to build wealth when you're starting out. But once you have a lot of equity, once you've done well with it, if you can find a way to redeploy that capital into notes, into debt, you can get a very high rate of return and do well with it. And so I always love this strategy that 4 greenhouses, trade them up into a red hotel. Okay, let's talk a little bit about passive note investing. This is the other side of the coin. For some people, they may really take a good look at this because it takes a lot less time. And the reason why, when you invest passively in a note fund, it's going to be professionally managed, right? And the fund operator and their team, they're doing all the heavy lifting. They're taking care of all these details I talked about before, the sourcing and acquisition. They go out, they have the relationships in place to get access to notes, to find notes to buy. And they're buying notes in volume. And so what does that mean? That means buying in quantity and volume, you can negotiate better pricing. And that translates to earning a higher rate of return. Also, the fund operators, they handle taking care of the due diligence, evaluating the notes, as well as managing and growing the portfolio on an ongoing basis. As I said earlier, loans get paid off all the time. And so part of the job is to redeploy that capital. As it comes back in, you want to redeploy it into new notes. And the end result is, with a note fund, there is a diverse asset pool. Note funds usually invest over a diverse geographic region. And your investment, as an investor, your investment, instead of being spread out over a couple of notes, it's now spread out over a diverse pool of notes. And that could be hundreds of notes or maybe even thousands of notes. And so that's really, really strong diversification. And it changes the game entirely. And so passive note investing, in summary, it's better for people that may have less time available, or they find that they don't want to be hands-on. I have these conversations all the time. People come to me and they say, "Hey, Fred, I love the idea of note investing, and I can totally see how it's a powerful asset class, but I sense that there could be a lot of pitfalls and there's a lot of details, a lot of moving parts." And so for someone that's feeling that way, investing in a note fund is a great option. Also, think about this. A lot of investors, they're busy professionals. Maybe you are a engineer or an attorney, or a CPA or a physician, and you're focused on your career, on the work that you do, and while you recognize the need for investing, you don't have that much time to pursue it. And so being a passive investor is a great option, whether you're a successful business owner or a successful professional or an executive. This is a great option. And so these are a lot of the conversations we end up having. And I always say the same thing. There's not a right or wrong answer. It's a matter of looking at your own personal situation and then seeing which feels right for you, and then you go with that. And so, in summary, passive investing better for someone that has less time available or someone that doesn't want to be hands on. And so we come to this question: am I investing in individual notes or in note funds? Right. And it all comes down to the time that you have, right? If you're going to do active investing, it takes a lot of time. It takes a lot of work. It's not easy, but it's very lucrative. You can do really well with it. And so if this is you, go for it. Jump in. It's a great business. Learn, get educated, and get involved. And if you're someone that doesn't have a lot of time, then the passive investing approach may warrant more consideration for you, right? There's the work that you do as a passive investor, the due diligence, you do it in the beginning on the fund itself, on the note fund and the fund managers. But once you do that due diligence and understand the risks and structure, then there's little to do. You get set up in the investment and you start receiving cash flow. And so ongoing, it doesn't require much. All the work is up front. Let's talk about transitioning. This is an interesting phenomenon. I want to spend some time on this because I see this a lot in my years as a note investor. I've met so many people, so many wonderful people in this business, and I want to share some stories with you because I've seen this happen numerous times where someone they start out either as a passive investor or as an active investor, and over time, things change and they switch their strategy. And a lot of it has to do with what phase of life are you in. And that's something that evolves over time. And if you're in the investment game for the long term, then this is likely going to happen to you. And I feel that within alternative investments of any kind, this is a long-term play. And when you have your money at work and you're investing with a long-term approach, you're going to do really well, really well. So let's talk about Tim. Tim is someone I've known for many years. When he started out, he was in the note business already, but he was on the origination side. He was a really successful mortgage broker, originating millions and millions every month. He was crushing it, doing really well. And so he became interested in note investing, but he didn't have a lot of time. But he knew the business because he was working in it every day as a mortgage broker on the origination side. So what Tim did was he started out investing in a note fund. He got involved as a passive investor, joined a fund through some relationships that he had, and he was doing really well. He started earning cash flow, was coming into his account every month as an ACH payment through direct deposit. And so he loved it. He said, "Oh, this is great." And so he was involved with that for several years. Everything went well. And over time, he started learning more and more about the note industry and becoming more interested. And so he was building a relationship with the fund managers and talking to them. And he saw that the fund that he had invested in, it was growing. It was growing and becoming more successful. And so he started having conversations with the fund managers. And eventually, you know what happened? He joined on to the fund as a partner. So he transitioned from being a passive investor to being an operator in the fund. And he loved it. He loved it. And as the fund grew, things that they went on to become very successful. And I always love telling his story because he ended up being completely in a different place than when he started, and has done extremely well. So he started out as a passive investor and then became active investor. And active is usually when someone is managing their own portfolio, but no, Tim went on to be managing partner in a fund, and so that was next level stuff. So really amazing. I always love talking about Tim. He's been so successful. So let's talk about the other side of the coin, about Rebecca. Rebecca transitioned from being active as a note investor to being passive. She was a successful real estate investor, had lots of rental properties, had lots of notes. She was doing all kinds of creative deals, knew tons of people in the industry. She had been doing this for decades with a successful career as an investor. But as she started getting up there in age, she said, I want to have a little more free time. I want to scale back. I don't want to work so many hours a week. And so Rebecca started to sell off some of her assets, sell off some properties, and really recouping a lot of her capital. And over time, she was investing that capital into note funds because she wanted to be more passive. The notes that she had, when they paid off, instead of buying new notes, she was investing those into a note fund. And her goal was she wanted to travel more. She wanted to spend more time with her family and really take things down a couple of notches. And being a passive investor really set her up because she was still earning the income, the cash flow, but pursuing the lifestyle that she wanted. And so there is an example of someone that was close to me that did this transition. And I always find it fascinating because no matter what you do, things change in life, circumstances change. And so as investors, we learn to be flexible, to adapt and evolve and grow all the time, all the time. So at this time, I want to just cover some final thoughts. I shared with you and compared and contrasted some of the ways that you can get involved as a passive investor, where you're investing in a note fund that's managed for you. It involves little time. And as an active investor, we're buying and building up a portfolio of notes, managing that hands-on and being active in the business, right? And so some of the final thoughts I want to leave with you, no matter which approach you feel is right for you, you got to build out your network. Building relationships, especially in the note investing industry, is one of the top things that you can do. Relationships are everything. This is where you're going to get access to deals. You're going to meet other investors that you can transact business with. You're going to meet fund managers that you can invest with passively. Whatever you do, deals come to you when you get good at networking, when you get good at building relationships. One of the things I love that Quest does is they host networking events where you can go and attend and meet who else is there, right? Other investors. You meet people end up forming relationships, people end up doing deals together, deals with each other. A lot of connections get made, and that's super powerful. So always focus on building relationships. It's one of the most important skills that we can get good at as investors. Next is consult with experts. Find experts that are in the space, in the industry, and work with them. Talk to them. Have conversations. Ask all the questions and explore the different options that are available to you. Like anything else, there's no right or wrong answer. This is a very personal decision about whether you want to pursue active or passive investing. And there's no right or wrong answer. It all depends on which is the right fit for your lifestyle and for your circumstances. It's a very personal thing. And the last point I want to make is always invest in your education. Always. It's one of the best investments that any of us can make. And investing in your education by taking up online or in-person training. There's so many trainings and workshops that you can attend. You can attend conferences and events where you get to network, you get to learn. Super powerful. It's one of the best ways that you can spend your time and your money is pursuing your education. And I always advise people, make it a line item in your own personal budget for investing in yourself, investing money in traveling to attend a conference or a workshop or an event. And I'll tell you what, the relationships that you build with the people that are there, it's powerful. It really is. And so I'd like to share in closing a couple of resources about note investing, a couple of books. The first book I like to talk about is called Invest in Debt by Jimmy Napier. This is one of the first books ever written about note investing. It was written in the 80s, and it's excellent. He covers a great deal about how to use a financial calculator to help you analyze notes and run the numbers on them. It's such a wonderful resource. For anyone that would like to text me, you can reach out to me by texting the keyword money to 215-461-4433 and then following the prompts. And also, I'll share about my book, which is called The Little Green Book of Note Investing. You can pick that up on Amazon, and it provides a great high-level overview of this industry, how to get involved in notes, how to perform due diligence, how to do deals in your self-directed IRA, which is a powerful strategy, by the way. And I'd like to offer all of you a special report about note investing. Happy to send that out. Just visit my website at giftfromfred.com. Sign up there, and I'll be happy to send out a special report. And so at this time, I'd love to turn it back over to Zach for some questions, Q&A from the audience.
Absolutely. Thank you so much, Fred. So yeah, I've had some questions throughout the presentation, but I wanted to go back and kind of get your opinion on them. So first, let's start off with Kevin asking, when you invest into a note fund, can you invest any amount and do you get both principal and interest returned?
Yeah, that's a great question, Kevin. So with note funds, there are so many different configurations. Usually they will have a minimum. To give you an idea, I've seen the range of minimums from the low end, maybe 25,000. Very common is 50,000 or 75,000. And some funds have a higher minimum. It might be 100,000 or 200,000. And so there's all different configurations. And it's a matter of talking to different fund managers and seeing which one lines up for you. And as far as the principal and interest, usually you get the interest, the return is paid, and the principal will be returned at some future time. But that's something that's spelled out in the operating parameters of the fund, and you will see different configurations as you pursue that.
Right, exactly. And what I mentioned to him, that's kind of the difference between investing into a note fund versus directly investing into notes, right? Directly lending. Whereas
Yeah, that's right. Directly investing in a note, usually most notes are structured where the payments are amortized. So you do get principal and interest each month.
right. So next question we have here is asking, what is the minimum amount to get started in note investing?
Yeah, there is no minimum amount. I've seen notes, if you're investing in individual notes, I've seen small notes that have $5,000 or $10,000 loan balance that you can buy. And it goes up and up into millions of dollars if you buy a jumbo loan, right? There's some big ones and everything in between. And
Right.
so you'll find all of that. That's if you're buying individual notes. And then with note funds, as I mentioned before, there's definitely a range. Most common on the low end is about 25,000 or 50,000, and it does go up from there.
Right. And Fred, this kind of goes back to, like you said on that last slide, where this is why the networking is so important, right? If you know more and more people in the space, and especially if you're trying to get in at a lower dollar figure, the only way to find those smaller opportunities is going to simply be networking and finding the people who are looking. Maybe they need just a short note to cover some repairs on a fix and flip, right? You
Yeah,
wouldn't have otherwise known that had you not utilized that network.
exactly. No, that's exactly right. And that's one of the things I love about Quest, you guys always host these great events, and you're going to be able to attend and meet people that might be looking for lending opportunities where, like you said, they're doing a fix and flip. Maybe they need $5,000 or $10,000 to update the air conditioning system or put a roof on the property, and so you can create a note for that and be a private lender. It's a great way to get started.
Absolutely. So the next question we have is from Kevin again, saying, "I'm looking to invest in the notes or a note fund, but only have 6 to 10,000. But they must pay back principal and interest monthly. Any ideas where to find these?"
Yeah, again, it's networking. Attend
Right.
events, attend conferences, and that's where you're going to meet other investors. And those are the folks looking for what you have to offer.
We got another question here. How does the interest collected on notes get determined? What is the standard interest rate on notes?
How does that get determined? It gets determined in the loan documents when the loan is originated, and there's no standard interest at all. It varies.
Right.
And it really depends on when the loan was underwritten and originated, what's the risk there. And so, like anything else, if you have higher risk, it's going to have a higher interest rate, right? If
Exactly.
there's lower risk, it's going to be a lower interest rate if you have a stronger borrower or a stronger collateral. And so you're going to see all across the board the
Right.
interest rates. Absolutely.
Absolutely. Yeah, like you said, when you're looking to lend, whether it be personally or out of an IRA, it really doesn't matter. In this case, you're the bank, right? So you're the one doing your due diligence. You're the one looking to see if the collateral is something that you're comfortable with, right? And that could affect the interest that you're willing to give, whether it be lowering it or raising it. So really, it's all about really what you're comfortable with, which is why that due diligence is so crucial in this whole process.
Yeah, that's a great point, Zach. Absolutely. I agree 100%.
And that goes for it looks like that covers the next question right there. We'll go to the next one after that, saying if you invest in passive notes and a property goes into foreclosure that you invested, how does that impact the note you're invested in?
If this scenario happens and you're a passive investor, the fund manager handles um, all of that, and the loan servicing company, they handle any legal work that's needed, and they coordinate all that for you. So if you're a passive investor, it's not something you should be getting involved in at all. And frankly, that this is more of a higher level of expertise. And so the fund managers and their team, they're going to be set up to handle this with the right legal counsel and the note servicers, and they take care of all those details.
Yeah, and honestly, guys, if you're looking to get into a note fund, right, be a passive investor, then that's something you could ask when you're talking to them. You know, how do you guys handle foreclosures? What is your checklist, right? What is their due diligence when they're looking at lenders, right?
Yeah, absolutely.
Right. If they have a good checklist and they're only lending to qualified borrowers, then obviously they're lowering their risk of foreclosures. But you still want to be sure they have something in place in case it happens. All right, let's go to the next question. Asking from Carol, says, do you offer a service to help someone get started? I guess looking whether it be active or passive. So Fred, I'll let you take that one away.
Yeah, absolutely. This is something I have conversations about this all the time. I always love connecting with investors, building relationships. And so I always invite you, reach out to me, connect with me. These are the conversations that we have on a daily basis. And it's always wonderful speaking with investors. People come from such diverse backgrounds, diverse experience areas, and there's no limit. There really is no limit. So always enjoy having those conversations.
Awesome. Thank you, Fred. It looks like that's the last question. Guys, if you have any other questions, throw them in the chat now. But I guess any closing remarks, Fred, how do people reach out to you one more time if they want to get a hold of you?
Yeah, absolutely. My contact information, you can visit my website at fredmoskowitz.com, or for an easier spelling, you can go to giftfromfred.com. Happy to send out a special report on note investing. And if you prefer to text me, you can text the keyword money to the number 215-461-4433, and then follow the prompts. Always look forward to connecting with investors and networking and building relationships, because that's what this business is all about. Thank you again, Zach. I've had a wonderful time sharing with everyone this afternoon, and I love the work that you guys do. Keep it up.
Oh, we appreciate that, Fred. And we thank you for coming out. You know, this is, I don't think this could have been timed really any more perfectly with, so many people having to turn towards private money, with banks kind of tightening up their restriction or their requirements for loaning. It's getting harder to get money out of the bank, and it's getting more expensive. So, private capital and private lending is more important now than ever.
Yeah, absolutely.
Well, thank you so much, Fred. And thank you guys for attending. If you have any questions, reach out to Fred. He'd be happy to help. If you have any IRA specific questions, reach out to us. Just give us a call, ask to speak to an IRA specialist. We'll be happy to help. But until then, you guys have a good weekend.
Thank you.